Biggest earnings week of the season. The market's in turmoil. What's going on with bonds? And what the heck happened to this market? Welcome to the Sunday Report. Let's go ahead and break it down. It was the perfect setup. The setup you dream about. You see it, you call the high, it comes in perfectly. Then the market drops just as you called. And then you paper hate your own convictions and look like a complete idiot. So let's do a quick recap of what happened last week. We see the SPY down here. We got that 450 perfectly. I tried to time some calls here. Got burned out twice, but ended up holding some into this week, which we'll kind of go over when we go over the earnings reports and why I did that. We see some bounce ranges here coming in. And remember, most of this movement is turmoil with currencies, turmoil with the interest rate market. It's a lot coming to fruition. And one of the reasons that I made those calls was let's be like, I was thinking to myself, well, that seems like too big of a reaction to just what happened at the IMF meeting. And from my perspective, all of that was old news. All of that should have been known by the markets. But markets really seem to be, that is, buying the whole Fed narrative that everything's fine. They're going to softly land the market, which is never historically true. To me, it feels obvious, sometimes too much in a ditch with my own convictions, forgetting that the market can be very emotional and irrational. And I was thinking that we'd get a lot of dip buyers coming in, but instead we just got more of a burn on that fiscal Friday. So happens. It was still a really great week. I can't lie about that. It was sweet and sour was ordered, and that's what we got. Well, I didn't mean to order it. It was an accidental or a misdial. Anyways, though, let's go ahead and break over the economic data, go over the earnings report, and look for the week up ahead. So coming into the week for the economic data, what's going to really matter? It looks like Monday is going to be a relatively quiet day. Expect most of this to come into consensus. We got some auctions. It'll be interesting to see how those go with all the funkiness going on with the Japanese yen. Coming into Tuesday, durable good orders should be pretty interesting. As you can see, these been on a decline. It looks like this forecast is doing pretty good. We could see some slowdown here expected to come in. Home sales have continued to be strong, and it looks like we have a bunch for house pricing, which is continued to surprise. There is expectations that this would slow all the way back. In November, I think, is when we saw a lot of experts saying that the market should start slowing down, and that really still hasn't come to play out. So, which is actually pretty typical of bubbles. Bubbles tend to last longer than people expect and be more persistent than people expect. And housing, I don't know. I'm not a real estate expert, so I probably shouldn't speak to that much more. But my speculation would be that when the Fed breaks this market and they reverse on these interest rates, and then it could keep housing prices strong. And since most of the buyers are not retail buyers or residential buyers or families buying homes, but rather pension plans and big investment firms, we could see some decent activity in the housing market, but we'll need to see how that plays out. And keep in mind, I'm a trader. I'm not a big real estate guy. I just keep an eye on that because it's important to. For the rest of these here, Wednesday's going to be pretty, Wednesday's been chop days anyways, and most of this looks pretty normal. GDP growth rate, this will be big. And we can see, this GDP's been running so hot. Should see some slowdown here. These core prices will be fairly important. The initial jobless claims will be fairly important. Expect that to come into consensus, though. But these GDP numbers will be really big. And then for personal income, month over month, this will be really interesting in personal spending. Make sure to keep an eye on what the pre-market looks like for both Thursday and Friday. And then that whatever trend you see to start to develop will probably persist depending on earnings, because we got a really big earnings week. So let's go ahead and hop over there and break that down. Sorry if I'm not bringing the energy on this video. I am pretty tired. I did a daycation. This is how this, if I can put words together, this will go beautifully. Let's go ahead and recap the company earnings. Woo! Had a fun day at the lake. That's what I tried to say earlier. So we got Coca-Cola leading it off on Monday morning. Activision Blizzard. This will be a really interesting one. We've seen that they were supposed to do a buyout with Microsoft. We talked about this before, and we've seen that the stock really hasn't climbed to that buyout price. And I want to listen into this and see what's going on with the NFTs. As far as the gaming goes, they've been hurt by policy changes in China. But at the same time, I think that the U.S. has done pretty good and been pretty consistent. This company owns some big names that do really well. So I expect that to have found an equilibrium at this point. And the big surprise I would look for is those NFTs that are potentially coming out. Microsoft. All right, so it's coming into Tuesday. We got Microsoft that evening. Microsoft's going to be really interesting. Google will be also really interesting. I don't really have anything to say about Microsoft that's big, other than maybe we'll hear an update on the buyout. Probably not, though. That's going to be a long process for them to get that done. Google will be interesting because digging in more into Netflix's earning, as we've seen a huge drop off in advertisers and ad spending, and online ads have not had a lot of success. So at the same time, though, this is Google. And when it comes to Netflix not doing well, I can't help but think of all the amazing creators on YouTube and how it's probably continuing to steal more and more customers from the other streaming services. And in another video, I was kind of trashing on the different HBO products, but a lot of people corrected me on that, on the success with HBO Max and the Euphoria, the new Game of Thrones coming out. And that was probably a bad take, because I think HBO Max is probably a standout contender. It's probably Disney, HBO Max, and then YouTube. And if you don't throw YouTube in that conversation, you're out of your mind, because YouTube's still the alpha, in my opinion. Visa is another interesting one. This is one of those staple companies that's going to probably get murdered by cryptocurrencies in the future. And I think they could be in loads of trouble when it comes to that. And MasterCard, I think, is more embracing the crypto world more adequately. And they've already experienced it more in digital currencies as well. Smaller companies should be able to adjust to changing environments better than the larger one. Enphase Energy. And this stock's come down a lot. I actually want to pull it up and take a quick look at it. And, this is still holding quite a bit of premium here. I am wondering if with increased prices, if those increased prices start to hurt everyone's bills, if people start looking into building solar. And the big thing here, though, is that this company could start to really have some more supply chain issues. And the big thing to think about with the big push in silver is also silver. I'll just throw that out there as well. Silver is a huge asset for that. And there's a few other hints on great opportunities as well for that market. But I'll just throw that out there. If you're in the Discord, you already know what I'm talking about. And I think that trade will go out really well too. Hint, hint, check out the Discord, link in the bio. Facebook. And remember what I said about the ad money when it comes to that. Qualcomm's another one. We've continued to see that these semiconductor companies are doing well and then sell off after earnings. And Facebook, I think Facebook, it's super difficult to be bullish on Facebook. Everything that should propel this company into the future is still very early in its development, still it's an infancy stage, and is burning a hole in their pocket because it's not really giving the profits they want at the time being. That said, they are the VR leader, but at the same time, you could see issues with the supply chains that's getting those materials out, and even having the adoption and technology be as widespread as you'd want. It's not like everyone's running around with a VR headset. We're still not there. This is still a very specialized demographic that they're aiming for, and I can't really speak to how fast that's growing. So, and a lot of people still aren't even fans of them. So it'll be interesting to see how that plays out. I'm definitely leaning towards the downside on Facebook, even though the stock's come down $200 in 6 months, which is crazy for a large caps company like this. And looking through here, Ford, I worried about continued supply chain issues for Ford, especially when it comes to EV. They're not a Tesla. They are not a Tesla by any means. They're so far behind. Spotify is interesting to me. Spotify is really interesting to me because no one thinks of Spotify as like a streaming contender, but I kind of do, because they have a lot of staple podcasts that are doing really well. And I want to hear more about success in this realm. At the same time, most of the revenue from those podcasts are going to be from ad money. And we've seen already that ad money is not really playing out well. So for businesses where that's a huge source of their revenue or a huge source of their growing revenue, if we see that continue to pull back, that could be an issue for them. That said, I expect that to hurt companies like Netflix more because they've had this monopoly effect where they've been soaking up all the money. And as more competition comes in, they see some of those profits kind of get pulled from them. And I think YouTube will be mostly immune to that, especially since they've already gone through their ad apocalypse phase, where we've seen that kind of pull back. But Spotify could be more on an upswing and be one of the ones that's soaking up those ad dollars. We'll need to see that play out. It's pretty speculative, but I do like Spotify. I do think the company's been doing well. I would like to see them have a better backbone when it comes to these fact checkers and people coming after them to fact check everything that's said. To me, that's nonsense. You go woke, you go broke is a saying that everyone's saying, and that's honestly seems to be exactly how that plays out, especially just when you look at Netflix. And then compare it to like HBO Max and stuff, like we said earlier. So we'll see. Coming down here, Teladoc. I think Teladoc is going to turn into one of those golden eggs where if this market crashes and this stock continues to hit new lows, which I think I had the low support at 65. Anything below there could get really rough, but I think the whole market would have to get rough before we saw that. But I think this company will probably be like right back to all-time highs. I think it'll be one of the companies that bounce back really well. If you're one of still invest in innovation and go long on growth, you got a 10-year horizon. I just think that this is such a great company to hold. Thursday, all right. Apple, Amazon, MasterCard right at the top. Oh, and McDonald's and Intel. Whew. I'm excited for the Intel earnings. I want to hear more. I want to hear an update for them on that domestic production, building those extra supply chains. I think they could be a big winner. Apple, I am so iffy on Apple. It's crazy. Now remember, the ad space has been rough for Netflix. Apple could be one of the companies. You have to also remember, Apple's been winning all the awards. At the same time, though, most of these awards are given by critics. And most of the movies the critics like don't make money. And most of the movies the critics don't like make a bunch of money. So that's one of the things I'm also keeping in mind, that relationship usually does exist. And Apple's been winning all the awards for the streaming films. So that'll be interesting. I'm leaning towards bearish on Apple. They've already said in several reports they've had supply chain issues. And I'm wondering if this will be the next company to have that huge blowout. And remember, when we see these major companies start to blow up, that's usually a sign of an entrance into a pretty bad bear market, which I've been saying we're in a bear market anyways for months. Amazon's Amazon. Amazon, in my opinion, is not a company. It's a need. You know, they raised their prime pricing. Some people freaked out about it. Didn't affect them at all. In fact, I think it's a great time to probably allocate a little bit into this company. I don't see Amazon like these other companies. Amazon is your modern day Walmart, and everyone's going to continue to use Amazon no matter what. They offer so many of the necessities. It's become a part of everyone's life to the extent that they're just not going to go anywhere. They're going to continue to truck along. Don't forget that they're doing a stock split, and the stocks continue to climb down. I expect this to bounce right back from all this turmoil that's been hitting it. McDonald's is interesting. McDonald's is not a stock that I would usually ever comment on, but there's been this new corporate push, actually led by Coinbase, and I'm pretty much commenting on this because it was mentioned on another podcast and then became kind of a trend on Twitter recently. But McDonald's has entered a brand new mentality that we've never seen them or a lot of other companies take the stance on, and they're saying no more politics, no more company taking a stance on social things whatsoever, which I think is great. You know, you make sandwiches, just make sandwiches and shut up. It's kind of my opinion, but yeah. So it'll be interesting to see how that affects the company. And if you're sitting here and you're like, What? Was they just giving up on all their projects? No, they're creating new incentives for employees outside of the work environment where they can do, ways to help society or support Ukraine, that type of stuff, support BLM and such, which I think is great. But if your company constantly is going from month to month, from cause to cause to cause to cause, and everyone within the company during work hours is focused on those things and not working, it hurts your work culture significantly. And Coinbase was one of the first companies to say, okay, we're done with this. No more using your work time to focus on things. No more monthly activists that just jump from cause to cause to cause. Your month-long support of something, it will not make any real change. If you want to make real change, you have to dedicate your whole life to a cause or a purpose. That's the same way for everything. People go from month to month to caring about this thing, that thing, this thing, that thing. All you're going to do is constantly pivot and not even be able to keep up with it. Because all you're doing is just constantly being reactive to what society's telling you is important. But what should be important to you is making sandwiches. So just make sandwiches. Roku's going to be a really interesting one. Saw Roku get murdered right when Netflix got murdered. A lot of people were confused by that. But it's just the same relationship. Roku's directly tied to all the other streaming services. If ad revenue is getting murdered in general, Roku will get double whammied. They'll get whammied by the fact that people will be using Roku less to use those streaming services, and they'll get hurt by the fact that ad revenue overall is coming down. Roku is also one of those top dogs that's had a bit of a monopoly in the space. And if we see money start to get taken away from this area, it's also going to really hurt the original streaming service that they wanted to offer on their own platform and competition. And when it comes to the physical devices, they've also been hurt by all the supply chain issues. And since so much of their supplies come from China, who's hit all-time highs in supply chain issues, I'm really worried about this company and what their guidance could be if they even decide to give guidance. We'll just need to see how that plays out. Robinhood. Who on earth is still using Robinhood? If you're still using Robinhood, it's a little sus. This company has managed to keep afloat. Apparently, plenty of people are still using the platform. At some point, that stock price is a bargain. Is it a bargain to me? It's never a bargain to me. I would short it to zero. Not literally, but if you had a gun in my head and you said pick a move on this stock, I'd say to zero. But realistically, it looks like they could survive kind of like a cockroach. It's hard to get people to move from brokerage to brokerage, mostly because most of them don't know that it's really easy to do. It takes one phone call and costs you nothing. And then you can actually, and I also think that a lot of people also don't understand that they don't actually own their position. A lot of people don't dig into the research of their brokerage, so they don't understand the importance of doing so. They could continue to persist with all the high retail traders, but if this market gets crushed, a lot of these people get burned. They lose all their money, and they get all these terrible fills because they're using the worst brokerage, in my opinion. It could be rough. It could be really rough for this company. And I just think, the first to do something amazing, the first to innovate doesn't mean that you're the biggest winner. 1-800-Flowers.com is the name of it. What in the world? I've never seen that. And there's not much going on Friday. So that covers the earnings. Let's go ahead and do our outlook for the week. So one of the things I will mention is I was super bearish in Netflix earnings and did not set up a short position. And holy cow, I wish I did that. But anyways, looking forward to this week. I'm bearish on a lot of the company earnings. And so we kind of want the market to rally up. I would kind of expect at least some chop. If we bring this up here, SPY looks like we could develop a bear flag right here and then see some chop, maybe a little bit of a melt up, some dip buying come in. But, sorry, you can't see what I'm talking about. This is what I'm talking about. So this downfall, maybe some chop and a bounce here. But the big thing I'm thinking here is that the macro environment is so rough. Now, so if we do see this market come up, I'm only going to get more and more short. I don't think we'll go back to 450. I think we actually could continue to see that 420 kind of play out. I'm hoping that we get maybe a little bit of a run up headed into Apple and Amazon. Maybe Google does well and market gets a little excited. and then maybe Amazon continues to do well and we get a bounce. Now, I do expect Apple to be rough, though. Remember, Apple is like still probably about 6% of the S&P index. And remember that these major caps all have different percentage allocations in the S&P index. They're not all evenly split. So when a big company like that has a big move, it has a major market effect. So that's what I'm kind of keeping in mind when it comes to that. As far as everything else, we've seen everything else play. And some people are trying to get short on energy. So keep that in mind. A lot of institutions are getting short on the energy. I think it makes squeeze potential. I'm still not very short on energy. I still like buying dips. I will continue to hold that perspective. But, at the same time, if we do see a widespread market move and big pullbacks, the energy will probably lead the market. So if we come into the week and I see that energy still selling off, but the market's continuing to melt up, it might be front running a big downside position. So keep that in mind if that does play out. Now, they don't have to correlate, though. They don't have to correlate, but they can correlate. So that's good to keep in mind. And I mean, when I'm so bearish, it's hard to be kind of bullish about anything. We could see this market hit new lows. 410 could be on the way around the corner. Past that, and I'm looking for 400. And then past that, I'm looking for probably all the way down to like 380. Now, what I'm really expecting until then is chop, 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 chop city. And I think that's probably when we get the next Fed interest rate decision and we see that play out, will be some pretty panicking, panic that might play out. Now, the big thing here, too, is there's all these things going on with these global currencies, interest rate markets, there's ripple effects from the sanctions. It's all playing out. It feels like I'm watching a train wreck, but I don't know where the train is. And I think I've said that exact quote before, and I got that quote from a big investor meeting that occurred in California with Real Vision, which is, there's some great journalists over there that cover finance and stuff. So that's the big thing I'm looking for there. And it's hard not to be super bearish on this current environment. And that's kind of what's going through my mind. Definitely missed out on playing last week better. It's fine. It happens. Still a very green week for me. So really can't complain too much about it. It's just we could have really maximized our profits if I had just held my convictions. But it happens. It happens. A big sell-off like that with huge volume we haven't seen in a very long time came in right now. So I'm kind of definitely feeling like this market may be getting much worse than I originally anticipated, much earlier than I originally anticipated. So if we break below that 420, expect some real roughness coming in. And we saw even over the weekend that the futures were really bearish. So that's good to keep in mind as well, because we're seeing some bounce back right now. We're seeing to find some equilibrium, but if this market continues to blow out to the downside, it's going to be rough. Now, if you go to the Discord, if you're a Discord member, we've also putting up a lot of TA charts, and we've been sharing those a lot more as well. So there's tons of analysis in there. We're trying to share more stuff for the public. I'm also been working on mine, kind of perfecting my Elliott waves, and I'm actually doing some mentorship. I'm getting some mentorship from some really good technical analysis who do it, analysts who do it professionally, and using logs for Elliott waves to find better bottoms, time bottoms and tops hot better. And we've also been posting some of that analysis for subscribers. Of course, we're trying to share more content to everyone as well. So that kind of leads me to a few changes that we're making. These videos will no longer come out at night. They're going to come out in the morning in the future. So these will be on Sunday morning, not night. And we're just sharing more material in the Discord in general, and that'll continue. So, and we're continuing to network and get more people on board. We're going to have a few more great podcasts come out and a bunch of other video stuff planned, but I'm no longer going to say anything ahead of time because sometimes I'm slower to get the stuff than I want to be because I'm busy. But it was nice to have that vacation. Let me tell you what, that's why I'm so tired today, but that was long overdue. I think it's been, I don't remember the last time I took a day off. So like a true day off and went and did something fun and didn't think about markets. So that was nice. But that's what's going on. Short recap, even though there's a lot going on. But of course, the conversation is always continuing in Discord. And I'll probably do a whole other video kind of covering stuff on. I just said I wouldn't call it videos, but maybe some TikTok shorts to help out in case you're wondering. Of course, I'm always putting stuff out on Twitter as well. So I hope you enjoyed this Sunday report. Hope you found it helpful. And remember, we still have merchandise in the shop. Would love to see you in the Discord. And I hope that you're ready for this week. Don't let my energy levels fool you. This is going to be a big week. There's going to be a lot of money-making opportunities this week, and it should be pretty exciting. So click the link in the bio, join the Discord, and I will talk to you in there.